Angel is brought to you by Salesforce Essentials. Jumpstart sales and support by leveraging the world's #1 CRM at a startup price point of just $25 a month per user. Go to salesforce.com/angel for an additional 50% off and a free onboarding call. And LinkedIn. You already know LinkedIn as the world's largest professional network. It's also a better way to find great talent. Go to linkedin.com/angel to get a $50 credit towards your first job post. Terms and conditions apply.
Hey everybody, it's Jason Calacanis, and we're here in Sydney, in Australia, for the Launch Festival Sydney. For those of you who don't know, we've been doing Launch Festival Sydney here for 2 years, and we found 3 companies last year to invest in, and hopefully this year we'll find a couple more. And I thought with the Angel podcast, we would try to find some of the most influential investors in Sydney. And when you ask people who their favorite investor is or who's doing a great job, Samantha Wong comes up over and over and over again. We met last year.
We did.
We had a nice dinner.
Yeah, it was wonderful.
Bennelong?
Yeah, Sydney Opera House.
Sydney Opera House.
Thank
The
you.
acoustics are terrible. Food was great.
Conversation was pretty good too.
Conversation not bad. We had Scott from Atlassian
right.
and
It
a
was
bunch of
fun night.
folks. You are a partner at Blackbird Ventures,
Yes.
which I believe is one of the top. There's 3 major VC firms here, from what I understand.
There's a 4th since I think you came.
Okay,
Yeah.
so run me down the 4.
Yeah, so Blackbird, I think we were the first in this new wave of VC in Australia. So we got started in 2012.
Great.
Airtree Squarepeg.
Yep.
And the 4th that is probably new to you is Main Sequence Ventures, which is a deep tech
Got
fund.
it.
Yeah.
So here, and then Atlassian, from what I understand, the most successful company in the history. Am I
think
correct?
that's correct, yeah.
Because they're worth $30 billion now.
Yeah.
I mean, it's extraordinary.
Yes.
Atlassian is a major LP, or were they the co-founders of Blackbird? Explain that relationship.
Yeah, so very tight relationship. Mike and Scott were both foundational LPs in
Great.
Blackbird. Mike was actually also on the investment committee originally.
Great.
Really, Blackbird is a founders fund. So it was not just Mike and Scott, but it was founders around 97 from all of the major tech companies that came out of Australia. So Aconex, Campaign Monitor, Redbubble, etc.
Fantastic.
All pooling their capital and their expertise to help the next generation.
And how did you wind up becoming an investor? What was your background?
Yeah, so like most VCs, kind of pretty atypical. I actually started my career as a lawyer, but I always kind of did stuff on the side. My parents were from technology originally, and eventually it kind of all came back to me. I became a product manager in an e-commerce startup called surfstitch.com, which at one point was the world's largest action sports retailer. This is kind of like the early 10s kind of era.
The aughts? Or no, the 2010
Late
era.
aughts, early, yeah, exactly.
What do we call it? The 10s?
The teens?
Teens?
Yeah,
10s?
Yeah.
I don't know. I know the aughts. It took me a decade to
Yeah.
figure that out.
Yeah, just after the aughts.
So after aughts,
Yeah.
before the roaring 20s,
yes,
which
exactly.
were almost upon us.
Yeah, exactly.
So you're working as a product manager.
Correct.
Previously a lawyer. Did you start up law, or you just did corporate law? Or?
No, I did like big M&A, public M&A, and then
great background,
litigation stuff. Yeah, like not at all relevant to
Yeah.
being a product manager.
Soul crushing? Did you enjoy it?
Yeah, like I actually really enjoyed it. Like I really loved the people. I loved the intellectual challenge. It just wasn't that creative, and it was kind of like all the fun stuff happened before it landed on your desk.
Yeah.
And I just had a fascination with things that were happening online, and yeah, it just felt natural to step out.
So how do you wind up going from, I get lawyer to product manager, you wanted to be on the other side of the table.
Sure.
How did you make the jump? Did you get recruited to be in VC?
No, I don't think anyone in Australia gets recruited to be in VC. I started a company that went through an accelerator that Blackbird runs called StartMate.
Yeah.
It was a services marketplace, a professional services marketplace. And, got really close to Nikki and Rick through that process. And when I was sort of between startups after StartMate, they were also sort of hiring their first hire, raising their first kind of big fund. The first one was a 30 mil fund, and the second was a 200 mil fund. So quite a big step up, and
they had a little bit of
a little management fee to keep the lights on with.
Can we hire somebody smart here?
Yeah. And so I joined the Blackbird team in 2015.
Fantastic.
Yeah.
And SmartMate is an
StartMate,
is a accelerator here. My understanding is you
Correct.
put $75K in for 7% or something.
7.5%.
7.5%.
If they haven't raised a round, so we'll also match valuations if they've raised something beforehand.
Got it. And how many companies have gone through Start Mate?
I think it's around 100 now.
Oh, wow.
We run 2 batches a year. It's been going since 2011. Each batch is usually around 12 to 15 companies these days. So we definitely see a lot of volume at that really early stage.
The thing I've been impressed with in my time in Australia the last 2 years and having made a couple of investments here is the founders here are ambitious. They want to build global companies. Maybe you could talk a little bit about the spirit of entrepreneurs here in Australia.
I would say in 2011, you would have said the opposite, that the ambition was a bit dampened, that people were only thinking about building local businesses or copycat businesses, taking Uber or Airbnb for the US and trying to apply it to Australia. I think really since about 2015 and onwards, that era when Atlassian IPO'd, Canva sort of became a unicorn, etc., it's really turned the light bulb on in people's minds as to, oh, hold on, I can actually build a really big global company, a $30 billion company here from Australia. And so, and that's great because we don't have a very big country. And if you just build for Australia, you're never going to build a really big
About 30
business.
million people here.
Yeah, size of Texas, It's just,
It's a tiny market.
Yeah.
And I recently had the founder of Canva on the podcast. Yeah. She finally was able to come on the podcast. She's a bit of a
Don't take it personally. She doesn't do many podcasts.
She doesn't do anything. You told me you guys are investors. It's hard to get Melanie to come out to do anything but work.
She's just super focused on building a great business and a great product.
So impressed. When did you first meet her? And were you early investors in her at Blackbird? Or?
Yeah, so Blackbird has been involved in every round since the very beginning. The first check was a $250K check. It was literally the first investment out of the Blackbird first fund. Actually, they held open their round to allow Blackbird to invest because we hadn't actually had our first close.
So with the first fund, Blackbird hit the unicorn of unicorns in Australia.
Yes. Yeah.
Because Atlassian predated
the
fund. So
absolutely.
You hit the biggest win with the first investment. That's amazing.
Yeah. And look, that first fund, to be honest, is just looking pretty amazing because even if we took Canva out, it would be a top decile fund globally.
Wow.
So
do you invest primarily in Australia, or are you open to investments in other regions? And if so, what regions?
Good question. Blackbird's mission is definitely to back Australia's most ambitious founders. So we'd always need to see a connection with Australia, not necessarily building here. About a quarter of our portfolio are in Silicon Valley or somewhere else where it makes sense to build that company. Over the last 2 years, we've also put about $10 million into New Zealand companies.
Oh, really?
And we are seeing phenomenal quality in New Zealand at the early stages. And so we definitely want to ramp up our investing there too.
Is there an advantage to being here and outside of the madness of Silicon Valley in terms of an ability to focus, or is it super challenging because of the talent issues? How do you look at that and advise your companies?
Yeah, I'd say you can actually have the best of both worlds. So Silicon Valley has become incredibly competitive for labor or talent generally. I mean, I don't need to tell you that. Yeah. In general, they are cheaper and more loyal here in Australia, but just as talented from a technical perspective, and easier to hire and retain, obviously. I would say there is capital here now. Previously, you had to go to Silicon Valley if you wanted to raise, more than $1 million, basically. That's not true anymore. So I think there are more reasons to start and stay here to some degree. The exception to that is eventually most people find they need to hire sales and marketing folks who have those networks in the US or in Silicon Valley. Yeah. But that can often be done as a satellite office or just as a branch office.
Yeah. I mean, there's time difference issues where when you're in sales, you're going to be picking up the phone or perhaps having lunch with somebody. That's not going to work remote.
No. Exactly. Yeah, that's right.
Or it's not going to work from here. It will work remote having workers there.
Sure.
Hey, when we get back from this quick break, I want to talk about valuations.
Sure.
My understanding is valuations here are yum, very reasonable. I want to know exactly what investors can expect in terms of valuations here at the seed stage, pre-product market fit, and post-product market fit. And when we get back on Angel, the podcast. Scaling sales is so hard. You know that, but it's so essential. You need to scale your sales process, your team, and of course your software. You know Salesforce is the world's #1 customer relationship management platform, also known as CRM. And now with Salesforce Essentials, you get easy, out-of-the-box tools and support at a startup price point, and that's critical. Here are the benefits. You're going to get set up instantly, and you can easily scale your sales team by customizing with clicks. You don't need to write any code. You will get simple integrations that connect and integrate all of your data under one roof. And you'll have full cycle customer support, so you can automatically connect multiple support channels. You'll be able to automate busy work and repetitive tasks so you're not wasting your time. And customers can help themselves, of course, with a self-service support site. Everything you need is on one screen, so you can track emails, calls, and meetings from your inbox. Get access to the world's #1 CRM at a cost fit for a startup. Go to salesforce.com/angel, and you will get a 50% discount with an annual contract, and you'll get a free onboard training session. So go to salesforce.com/angel and get that 50% discount right now. Hey everybody, welcome back to Angel, the podcast. You can visit the podcast at Angel Podcast. If you do a search in your favorite podcast player for Angel, you will not find us. You will find a bunch of Christians talking about angels in their lives, which is also a great podcast to listen to if you're so inclined. But if you type Angel and my last name, Kalakanis, you will find it eventually, or just go to Angel Podcast. This is our 3rd season, thanks to our partners for making it possible. Every time we get a couple of partners set up, we do a new season of 10 episodes, and this has been our 3rd season. It's gone really well. I'm delighted to have Samantha Wong, goes by Sam, here in the community, and you can follow her on the Twitter, Holla Sammy,
Yep,
HOLASAMMY, and she's a partner at Blackbird Ventures. You can find them on the internet, blackbird.vc. So let's talk about valuations.
Sure.
Obviously, Australian dollars are 75 cents on the dollar.
Yep.
So that's great for American investors and LPs.
Sure.
And my understanding is average valuation, pre-product market fit, 2 million, maybe product market fit, a couple of customers, product and market, 3, 4, 5 million. Am I in the ballpark, Australian dollars?
I think those averages would probably hold up. I think there are always exceptions, right, for star founders or super amazing teams. Yeah, but broadly, you're right.
And so what does a seed round look like in Australia? When it comes together, what are the broad strokes? The amount of money, how long does it last, people?
Yeah.
And who's leading these rounds and filling in the rounds? How does it go down?
So I think, the physics of it is very similar to what you'd see in Silicon Valley. So people are generally giving away around 15 to 20% of their company for that first round. It might be somewhere between 1 to 1.5 mil that they're raising, maybe a little less, a little more, depending if it's, software versus hardware, etc. And that's kind of the stock standard, sort of a 4 to 5 mil valuation for that seed round. I would say though, the best companies that we've invested in at seed stage, Canva included, were always exceeding the market in terms
8, 9, 10 million. Double, basically.
Yeah.
And how do you personally get a sense and get comfortable with that higher valuation? And how do you know now, because you've been doing this for, I think, 5 years, 6 years, do you have a spidey sense, do you have a gut for, hey, this is something special, I'm going to maybe look at the valuation slightly differently?
I think at the very early stages that we're investing in, sort of pre-seed, seed, I just need to believe, can they make the unit of progress they need to unlock the next round of funding and raise at a higher valuation than I'm paying now? And if I don't believe that, it's not about that. I should just walk away. Often I think valuation is a way to test your conviction around your whole thesis around the investment.
As the investor?
Yes.
And so if you're looking at it saying, hey, we're going to spend $1.5 million, a milli, I guess you guys call it a mil.
Yeah, a mil.
A mil. You put 1.5 mil in for 20% of the company, 30% of the company, 15% of the company, whatever it is. You really have to start thinking, can they get to that next level, which would be maybe a Series A or a second seed round for $3 million
Yeah.
at a $15 million cap, and what would that look like?
Yeah, exactly.
So you're thinking about the next round when you're doing this round.
Yes.
What does a company have to achieve here in Australia?
Yeah.
And I don't know if it's different than the US, in order to unlock a Series A today? 2019, we're here having this discussion.
Yeah, well, I think it depends which Series A you're talking about as well. So
Okay.
we have this phenomenon of the Australian Series A.
Oh, explain what that is.
So it's an Australian Series A is probably like a 3 to 4 mil round.
Well, that's like the classic Silicon Valley Series A from just 10 years ago.
Yeah, not that long ago.
Sequoia
you're
would
right.
put $3 million. They put $3 million into Mahalo for 20%
Yep.
at a, I think, $11 or $12 million post. That was a standard Series A.
Yeah. So I'd say we're stuck in 10 years in the past, maybe in terminology stages. But so I would say to get to that level of milestone, you've got to have a product out in market, some demonstration of customer love, maybe not revenue, but really amazing engagement up and to the right, that kind of thing. And then at that point, you'd probably raise, that 3-4 mil round, which would get you to the next funding milestone, which is when the US Series A would typically happen. And that would be that 8 mil plus round.
For 20%, which then,
Yep.
if you start thinking about that, it would be 5 times 8 is about 35, 45 million, something in that range,
Correct.
which used to be what Series B used to be.
Yes.
And so that what we're seeing here is this sort of classic A here, which is a function in the United States, at least, of larger fund sizes.
Yes.
When you've got an $800 million or $600 million fund, boy, do you need to write bigger checks.
Yeah,
It's
absolutely.
just, you can't
and
do.
ownership is very important. Yep.
Yeah. Do you have that sharp-elbowed ownership concept here where VCs, you have these big four now, are trying to compete with each other, or does it feel more collaborative at this moment in time? Co-leading, et cetera.
Yeah, I think the thing is with only 3 or 4 large size funds is we all actually have quite different mandates. So we will only look at things that are global from day one. We have a preference for bottom up sales processes rather than enterprise sales processes. About 50% of our investments are deep tech. Some people won't touch deep tech. Some people won't touch pre-series Bs. So we don't find ourselves bumping up against local firms all that often, which is great because we love to take sort of 75%-ish of the seed and maybe the Australian Series A round, fill out the rest with our co-investors from our LP base, like Mike and Scott from Atlassian and other folks in the community. And
Value added
absolutely.
people who might add a little bit to mentoring the founder.
Yeah, I mean, we're founded on this idea of founders helping founders, and getting that skin in the game is one way of helping do that.
You mentioned bottom up versus enterprise sales. What does this mean?
So when we talk about bottom-up sales, we're talking about typically products that can be discovered organically or with a very low touch. So maybe it's through online advertising or SEO, something like that. The user experiences the product on a free trial or something of that nature, punches in their credit cards and upgrades to a paid account, and then hopefully virally spreads it through their organization or their community or what have you, and expands into a larger account through that. Contrast that with an enterprise sale whereby you have a bunch of people kind of doing maybe outbound email, cultivating leads, scoring them, and then maybe on the high end of the side, steak lunches a few times until you close the deal. On the lower side, demos, presentations, etc.
And I guess that comes from your Canva DNA, having watched Canva. People just say, I need to make a wedding invite, or I need to make a flyer, or I need to make a web page, and Canva comes up in a Google search or in a SEM, a search engine ad. They try it, they upgrade to $9.95 a month, but then eventually 8 people in the company start using it, and then a sales executive says, oh, we're at 8 people at IBM or 80 people, maybe we'll make a phone call.
I think they have one salesperson now, so it's not even someone making a phone call. It's just it's even like lower touch than that. But the Canva is actually a realization of a hypothesis that preceded Canva, and it was really around Atlassian. Atlassian, were the first in the market to have this idea. We'll just build the best software will make it so cheap that dev team leaders anywhere around the world can bung their credit card in and expense it, and eventually it'll grow through the engineering teams, and suddenly we'll have a reasonably big account on our hands. So they kind of originated that model, and the beauty about that model is it doesn't matter that you're in Sydney. You could be anywhere. You could be building that business from literally anywhere. So it's no disadvantage to not be in Silicon Valley, and that's where we sort of one of the foundational theses around
So
Blackbird.
you saw that up close and personal and said, hey, I wonder if other businesses could do that. And in fact, Atlassian used to have a product called HipChat, which was the embodiment of that, and Slack stole this exact, or was inspired by, if you want to be generous, but they stole this exact model, which was, hey, just buy it, and eventually if you want to upgrade, there's a couple of features that you might like getting past 10,000 in your archive, $7. And Atlassian eventually sold HipChat to Slack, I believe, to consolidate the market and get a little bit of exposure there.
Yeah. And I mean, there are other examples in our portfolio that kind of follow that very similar trend. There's a company called Safety Culture, which is a safety and quality inspection software platform. Similar thing, like there's someone out in the field, having to complete these paper-based checklists. They go onto the App Store, they find the iAuditor app, download it, realize...
What's that one called? iAuditor?
iAuditor is the product name. Safety Culture is the company name.
Oh.
So Tiger just led their last round, but also a really awesome company, and similar thing. People downloading these free apps from the App Store, suddenly managers are receiving these emailed PDFs from the iAuditor app. They want to consolidate it and get
have
analytics,
the management tools.
exactly, better security and whatnot, and suddenly you've got a many hundred seat kind of account on your hands. Yeah,
it's such a brilliant model too, because what you're saying is, let's undercharge for the product. And Melanie talked about this a lot on when she was on This Week in Startups. They didn't raise the prices. They have some additional products that you can buy to get extra value and play team player mode, but they want to just have everybody using it. It's a really different mindset than software before that time frame, whether it's cloud-based or not, where you're trying to maximize your profit per user. Here you're explicitly saying, let's minimize the profit per user and get more users. And in the age of data, oh boy, is that an advantage when you become the standard and you have all the data from that large user base.
Yeah, I mean, there's that, and then also you expand the market. 7 or 8 years ago, when Canva got started, the market of graphic designers probably didn't look that exciting. Right. But the insight that Mel and Cliff and Cam had is that actually everybody wants to create beautiful designs. They just don't have the skill. If we can make a good enough product so that they can have can create products of that quality, and make it cheap enough that no one even thinks about how much it costs. Yeah. Suddenly the market is many orders of magnitude bigger.
Yeah, just like Uber said, hey, the original tagline was everybody has a private driver.
Yeah.
And the concept of Travis's original idea was like, wouldn't you love to have your own driver? That was like an elite concept that somebody would come pick you up and take you somewhere, and you sit in the back and just mellow out and read a book or check your email. Everybody's private driver. How do you do that? Well, you have to lower the cost in order to expand the pool of potential users.
And anybody can be a chauffeur as well as...
Yes. You mentioned deep tech.
Sure.
Explain some of your investments there in deep tech and how you evaluate deep tech when there's so little to go on, because unlike Canva, Atlassian, or your checklist company, gosh, they have some data to look at. They have some early user data. With deep tech, you don't have that data to go on, and you have to make a decision as an investor. So answer that question when we get back on the Angel Podcast. Hiring is always hard, and it's getting really hard today because we've got unemployment at historic lows. Also, many people just throw a job posting out there. They put it on their job board or some random message board or dump it in your Slack room. That's not going to work. It's not going to work. But what is going to work is to go ahead and use LinkedIn. LinkedIn is where 610 million members visit, and they do that to make connections and learn and grow as professionals. And sometimes they're looking to discover new job opportunities, or sometimes they're passive job seekers. And that is the secret. Not everybody's going to a job board every day looking for jobs, but LinkedIn will present opportunities to those hundreds of millions of LinkedIn users. And here's how easy it is. You just simply go to LinkedIn and It's really easy because you say where you're looking for the person, you put in your job, you can then look for what experiences you want them to have. How many years of marketing, you set a budget, boom, it's up and running, and you will find somebody quickly. How do I know this? Because we found 2 of our 15 team members on LinkedIn very recently. Sir Charles, our new director, and our marketing manager, Maureen. You can create these job listings quickly and easily, and to get $50 off right now, a fitty, okay? 50 for your first job posting. Go to linkedin.com/angel, A-N-G-E-L. You know how to spell angel. That's linkedin.com/angel, and you will get $50 off your first job posting. Terms and conditions apply, of course. Now, let's get back to this amazing podcast. Hey, everybody. Welcome back to Angel, the podcast, angelpodcast.com. And you can follow me. I'm Jason Calacanis, angel investor in the United States, but I'm here in Sydney for a launch festival, sydney.com. We've done it the last 2 years, and we'll see. We may come back for a third and fourth. We'll have to negotiate with the New South Wales government, but they've been so amazing to us. You can follow me on Twitter, Instagram, @Jason. I'm showing off, correct? Or if you still have a Tumblr account and they still have that website up, I'm jason.tumblr.com. I do not have a TikTok account. Are you on the TikTok like the kids
my
here?
dad was talking to me about TikTok yesterday, which I think is a little weird. But
Wow. Was it a dad joke? Was he doing like a dad joke that he opened a TikTok account to embarrass you?
I hope not.
Now that I'm a dad, my 9-year-old, London, when I take her to like school events and stuff like that, I'm like, do you want me to dance for your friends? And Dad, do not embarrass me. I was like, well, I have some new moves, and I know that you're having this talent contest, so I talked to your teacher, and she said that they're going to have a dad competition. I'll be the only person, so I'm going to win. She's like, no, they didn't. I'm like, no, they did. So I'm getting all my dad jokes. You got to get your mom jokes ready. And thanks for doing it. You're for people who are not listening, you're 8 months in. Congratulations.
Yes, thank you.
You're pretty hardworking here, podcasts and everything. Hey, when we left our hero, that's you. I want to talk about deep tech. A lot of people have given up on investing in deep tech and are focused on, hey, CAC, LTV, show me your metrics. Let's get your segment
for
out.
us.
Yeah. So take me through how you evaluate deep tech and how you think about how long it's going to take to commercialize and how you fund those companies. Because it is, I think, a distinctly different funding model. Am I correct?
Well, I guess that's where we would draw the line on what we would invest in and what we wouldn't.
Okay.
When it comes to deep tech. So typically what we're trying to do is, so we've called it science nonfiction rather than deep tech internally. And so what we mean by
science nonfiction.
Yeah.
I love it.
And so what we mean by that is like, at superficial first glance, it looks like something that's kind of crazy. It belongs in a PhD program or something like that. But if you actually kind of look under the hood, it's really achievable on sort of 1 to 2 rounds of capital, much like a software company is. No one's really getting to $1 million ARR, a significant proof point in software these days without, 4 or 5 mil raised,
sure,
pretty much. And in deep tech, you can also find these companies who are able to kind of get distinct proof points in 1 to 2 rounds of capital. So an example might be we have a LiDAR company called Baraha that we invested in their first round and onwards. That first round was really about taking a demonstration of the product, which is sort of table sized, making it tissue box sized, and selling it to an early access program to early customers in the autonomous vehicle space.
Wow.
And they could do that on basically a couple of $1 million.
But they had built that box, at a university or in their garage?
No, I mean, the guys did it part-time. It took them, they'd quit their
Sweat
jobs
equity.
3 months.
Yeah.
3 months, I think a friend put in $100K on a convertible note to help literally buy fiber optic parts and so on.
So these are people who had the skills themselves to build the product. I think that's critical. A person with an idea to build deep tech, not a good investment. People who can build it themselves, who are builders, that makes it a lot easier because they don't have to hire people.
Well, we typically need to see some evidence that, they can get this thing built cheaply within 18 months. So
cash efficiency becomes a part of the thesis as well for near future, not... Which was the term you used? Not science fiction?
Science nonfiction.
Science nonfiction. Capital efficiency is going to come into play here.
Yeah.
And you don't want somebody who's on a 5-year time frame?
Fundamental R&D or fundamental science is not something that we typically can do, on venture timelines, basically. No. And you often don't need to. Like you can stand on the infrastructure that's been built through mobile, internet software, etc. People aren't kind of inventing things from scratch a lot of the time these days. Yeah,
they're standing on somebody's shoulders. It's just a matter of whose.
Yes.
And if you look at Oculus, which some people think, oh my God, this is a deep tech company. I was like, well, there was a lot going on with screens. And if people don't remember, some of the first VR concepts were, well, we now have mobile screens and mobile batteries that are capable of putting on your head.
Yes.
Yeah,
that's a really good example. So we
and
need to see that.
Miniaturization of components that were led by mobile. The government here is not quite as dysfunctional as our government at the moment in terms of geopolitical and the Trump chaos, problems. But you have a government that, from my assessment, is not startup friendly to the extent it is in the United States. In the United States, we allow a little more risk-taking, I think. Syndicates come to mind, SPVs, just a little more fluidity. Talk a little bit about the regulatory environment for startups here and what needs to improve.
Yeah. I mean, I think it's probably important to make the distinction between the rhetoric and what is publicly said and the actual legislative environment. There are certainly areas we could improve on. I mean, immigration is a really big one. Talent is an issue. We should be doing everything we can to make it easy for really talented people to come to this country.
Now, you have a point system.
Yes.
Is that right? Like Canada?
Yeah. I'm not that familiar with Canada's system.
Yeah, they have a point system as well. Explain just broad strokes if you can. Yeah. No, I didn't bring you on to talk about immigration, but what that means, and then where you see it breaking down and maybe working against or not being a competitive advantage or a detriment to the startup community.
Yeah, so I guess, the main differentiator, I guess, with the US is that we don't have this lottery system where, you could just be lucky and turn up, getting a visa to Australia. Typically, we have different programs. The highest skilled visa program is the one I kind of see most in relevant to startups where, there are a certain number of visas allocated to people who have degrees in certain areas or have experience in certain areas who can demonstrate that a local technology company really needs their services and, can theoretically fast track their applications. That's probably where most of the complaint is just
define fast track. Are we talking about a month or a year?
I've seen upwards of a year, which is the really probably disappointing part. But
startups out of business by then.
Oh, absolutely.
They have 12 months of
or
runway.
Even more ludicrously, I've seen some startups contract workers overseas while they wait for these applications to maybe be approved. I'm kind of it'd be really great to have that salary taxed in this country rather than
that is paradoxical. It's we're going to ship money to Singapore or Tokyo or the United States or New Zealand, wherever it is.
Yeah.
And cost this country the tax revenue or the velocity of that money being spent on lunches, dinners, furniture, going out and about, hiring nannies, whatever it is, the trickle down or monetary velocity that high tech salaries create for a community.
And look, the tax is one part, but then there's just the training aspect as well. We just need to attract these people with experience who can help us, upskill our own population. But aside from immigration, there is a lot of good stuff that the government does here. I think the R&D tax credit is a big one. This is one where you can get almost 50 cents in the dollar that you spend on R&D. Refunded to you from the government.
You used a little air quote there on R&D.
Yeah.
The R&D definition, if you're working on, my understanding is if you're working on something that's not going to market immediately, that would be R&D. So if we're working on version 3 of a product, maybe, and you have one in the market?
No, it's
how
broader.
Does it work?
It's broader than that. And look, this is an area that really needs to be clarified by the government. Because in the past, I think people have been a bit too liberal. It's kind of every line of code is not true R&D, but it's sort of new features, new bits of work. So, and it's really important to document that and to know what you're doing up front. But the headline is still free money for startups. And we also have pretty great grant programs as well. You've probably heard, Canva, I think, was a great recipient of about 1.6 million.
Non-dilutive.
Non-dilutive. and really at the early stage when it's
And think about how many hundreds of jobs that created.
Totally.
And if it created just 10 jobs, that lasted 10 years, and each year that person paid $15,000 in taxes or spent $15,000 in pubs and restaurants and buying stuff, it would be a break-even proposition for the government. So what a huge win. And Canva created much more than that in terms of value, let alone the venture returns for your LPs and other LPs here that would then reinvest it in the next crop of companies.
Yes.
So those are just, really great advantages you do have here.
Yeah, and I think the third thing that they do well is we have a program called the Early Stage Venture Capital Limited Partnership Program, which offers tax-free returns for investors in funds like Blackbird.
Whoa.
I know.
I'm going to have to slow you down here because this sounds quite appealing.
Yeah, it is. It's a wonderful program.
I'm a citizen of Australia.
Resident even.
Oh, yum. You guys are trying to recruit JCal? So I moved to Sydney.
Yep.
I put $1 million into Blackbird Ventures 3.
Yep. It
turns you 10x my money. I have a $9 million gain. What happens?
Provided all those companies, I mean, there's the high level answer is you don't pay any tax on those returns.
Oh my, yum.
Yeah. So,
but they have to be some percentage of those dollars have to be invested here.
Yeah, you can invest up to 20% of your capital in foreign companies.
Got it.
That actually, in reality, turns out to be much less, around 10%. But that's fine.
Yeah.
It's still greatly stimulating the growth of the industry here. And to your point, that capital gets recycled into the system and into more funds and more successful companies.
What do you love about this job? Because you've worked as a service provider, as an attorney, you've worked building the product. You seem delighted with this career. Based on my experience, we've known each other now for 2 years, or going into our second year. What is it that you love about investing in startups?
Well, I mean, I love the breadth of ideas, problems, markets that you get to learn about. I mean, just this year alone, we literally looked at neural computing companies, 3D cell printing, clean meat, cell-based meat companies, SaaS, rockets, etc. But what's even more awesome is the people behind those stories. Typically when we invest, it's literally 2-3 people, a little bit of product, a really big vision, big ambition, and you get to be a really small part of that journey that they go on. I mean, so many people talk about the things they're going to do and complain about what is. I get to spend my whole day with people who are doing something about it.
It is so delightful in an age of people complaining and being victims and being outraged and depressed to just hang out with the people who,
they're trying. They're just trying.
They're just trying, and they're blocking that out and saying, let's just get to work. Let's roll up our sleeves.
Yeah. How might it work?
Yeah. How might we fix this?
Yeah.
Instead of complaining about it or being depressed about it, let's take some action. You mentioned neural computing or interfaces. Explain what that is to the audience that doesn't know what that is.
So this is basically, instead of classical computing running electrical circuits, using the electrical circuits essentially in neurons to process information. The idea being like that this is much less energy intensive than classical computing and also a lot faster. And there are some people who believe, and I am not expert enough to comment on whether they're right or not, that certain general AI may never be possible unless we have something like neural computing.
Some quantum leap in computing power.
Yes.
Which could be quantum computing.
It might be.
Or it could be biological computing is what we're talking about here.
Yes, correct. Yeah. And the idea that being some areas of human intelligence like creativity, linguistics, I think is sometimes put in this category as well, require such abstract connections that it's not purely mathematical power. It's something else.
Yeah. It is interesting to see AI be sprinkled on top of every startup we see, food delivery powered by AI so what are your thoughts and how do you distinguish if a startup actually is AI powered or they're sprinkling the machine learning AI fairy dust on top of it?
I think we're trying to like sort of dig into, okay, what exactly is the step change here? What are the AI technologies you're actually using? Who in the team here has that data research, data science background? And I think much more importantly even is where's the data that you're going to train your algorithms from, or what's the evidence that your algorithms already are a step change better than the status quo? And most companies don't actually that claim to be AI don't actually have great answers for how they're going to get that cold start training data.
I love that answer because every company is just sprinkling AI on it, and a lot of investors.
Blockchain.
Yeah, it was like blockchain last year, and when you look at it, my first response when they say they're doing AI or they're adding machine learning is, okay, who on the team is doing that? And boy, does sometimes you say like, yeah, well, we're researching into it, we're looking into it, we have an open position for that.
We and DeepMind and Facebook and are trying to hire those people to do that for us.
And they're offering them salaries that would be the entirety of your round of funding.
Exactly.
So
if you could
attract them, and you might, if they're truly passionate about it.
Absolutely.
The crypto craze seemed to land here pretty heavily last year when I was here. It's gone now. It seems to have.
I think the air has come out of crypto generally in a lot of places. So,
is that correct? And what did you think when you saw ICOs and companies selling tokens that did not exist yet to investors who had never invested before, who were sending money to wallets of people they'd never met in person? What was your assessment as a professional investor when that phenomenon was going on and people were putting pressure on people like us to have a crypto thesis or strategy? Did you participate? Did you get FOMA? What was your reaction to the madness 18 months ago?
It's a really big question. We have actually done some investments in crypto, but this was actually, preceded all this craze. This was like 2013, 2014.
Okay, when it was legitimate technology.
And,
were you investing in tokens or companies?
Companies, equity.
Okay.
Yeah, exactly. And the performance of those companies have almost entirely kind of depended on the price of Bitcoin and that. So, but that has been a fascinating journey. I guess what I would say is we haven't really been involved since then, and largely it's because they sort of seem to be, a lot of the companies we've seen like fail on startup 101 stuff. Have you validated the problem? Have you talked to customers? Have those customers validated that you're building something of value? Does this market even exist?
It is amazing when you think about the delusion that occurred, that people were able to write a white paper with spelling errors and grammatical errors in it saying, here are some obvious statements about the world. We have yet to talk to customers, but we believe that this blockchain or immutable blockchain proof of stake will take down Canva, Uber, and Atlassian. And you're like, but you don't have any customers. You haven't talked to them. There's not a single product that has come out. Is there a single product besides store of value and money transfer that has come out of this that you've seen that you were so compelled by?
No, and not that I'm aware of. And I think the main thing is like, at that early stage comes back to team. Do you really want to invest in the team that don't want to talk to their customers, that don't want to build the product first, that kind of want to raise all the money but not do the actual work of delivering on the vision?
It's a bit of a tell, isn't it?
Yeah. It's just like not how we would like to spend our time. We want to spend our time with people who love to build product and delight customers. If you are doing everything you can to raise money and not do that, we're probably not a fit.
Yeah, to me, that was the ultimate tell. We want the money and we want unlimited amounts of money. There's no cap on it. There's no protections for the investors. No. It was an extraordinary turn of events. I found one product that I was super compelled by, and it sounds like a joke. The one I thought, this is the perfect application, was a company called Krypto Kitties, which I don't know if you heard
Bill
about.
Ty
I think Bill Ty was involved in it.
Yeah.
So Krypto Kitties, for people who don't know, was, hey, you could buy and sell a cat, a digital cat or a digital object. Now, this seems silly until you consider trading cards, art, Tamagotchi, and other digital assets in video games, et cetera. And that, my gosh, if there are a limited number of these digital assets and you could trade them freely and even create smart contracts between them, my mind was like, well, this actually is something that an artist would be very interested in. And if you talk to 10 artists and said, you made this beautiful painting and this object of art, and you're going to sell it to me for $100, you're starting your career. But I will give you, as part of the contract, if you sell it to me for $100, the ability to receive 20% of the next 2 transactions that occur. So when I sell it to another person, they must agree to give you 20% when they sell it, if they sell it, in the next 100 years. And I will give you 20% of the sale if I sell it.
Yeah.
How would that sound to you? And what 10 out of 10 would be like, yes.
Yeah.
So that to me is smart contracts is just so brilliant.
Yeah. Well, I'm not dissing the technology at all. In fact, a lot of the things was like, oh, that makes sense. The world should work that way. But what we do know about startups is that humans are pretty irrational a lot of the time. They don't always buy the thing that they should, that is good for them, etc. And we just need to know that up front before we put some money in.
Yeah. I mean, if you think about Betamax and versus VHS, or mini disc versus CD. Like the mini disc from Sony was digital, recordable. The CD was not. The mini disc was smaller, was more stable. I mean, it was like there's so many much better aspects to a mini disc than a CD. Yet Sony spent billions trying to make that work and they couldn't.
I mean, talk to sort of 99% of fitness apps, you know, like humans are irrational. They don't do the things that they should do that are good for them. And, you know, it's just.
Tell me about the one that got away.
This is an interesting one. So there is a unicorn in Australia called Airwallex.
Airwallex.
Yes. It's in the payments and currency space. It sort of fell within our era of operation. So we got started in 2011, 2012 by the time, you know, we actually started raising the fund. So technically, and it is serving global customers. So technically it does fit into our mandate. I think we got caught out because we don't do fintech because so often it is Australia only, Australia focused, and we're so global focused that we kind of got blinded by the headline that it was in payments and currency and figured, you know, at that early stage that it probably wasn't in our mandate and you know, didn't meet the company and didn't take it up, and it's turned out to be a fantastic success story with an absolutely phenomenal founding team. It's based in Melbourne. So I think that one was a clear miss, I think, for us.
Have you seen, what do you take away from that? I'm curious. Because that's part of what we do is like try to fix the leaks in our game as investors when we make these mistakes. Have you tried to fix that leak? Do you carry it with you forward?
I wouldn't say this was directly in response to that one, but that one was a cold email as well, which we actually got back to.
Oh my Lord. So that makes it doubly painful.
Yeah.
Somebody sent you a cold email, which you get an unlimited number of. You responded to a cold email that turned into a unicorn.
Yeah.
And didn't make the investment.
Yes.
As painful as it gets, I believe.
Yeah.
The only more painful scenario would be a friend of yours saying, would you like to buy some shares of Tesla at $1? And not doing it, which is what happened to me with Elon. Like, I'm not an angel investor. Yeah, I don't really do that angel investing thing.
I mean, I don't know if we're just, you know, too zen about it. Like, I mean, they have gone on to be phenomenally successful, raise money from other funds in the market, such as Square Peg.
So you're happy for them.
So we're happy for them, and
you're
we're happy with
we're
happy with, you know, our fund performance. Like, we have lots of wonderful companies.
I highly recommend you do not get comfortable. I would say be bitter.
Well, I think what we have done, what we have done is, what is clear about that company is we were wrong about our hypothesis about them being Australia only. We should have dug deeper. And the second thing is that is an amazing team, and some teams are anti-gravitational. Well, we have since refined our process to you know, get better or higher fidelity on email or through the cold email funnel on whether these are potentially really amazing people.
Is there a metric you can share or an internal slogan or device heuristic? I know it's a competitive advantage, and that's why I'm asking, because I would like it myself. Of how do you assess exceptional founders? I have some ideas too. I'll share mine.
Yeah, cool. Well, I mean, we have a bunch of questions that we sort of internally ask ourselves and ask each other. Unstoppable force is one of them. Are they an unstoppable force? Would I work for the founder?
Oh, great test.
What is the evidence, or what's the data that they're going to be a magnetic attractor for talent? You can usually see that right at the beginning. We have another term, Cliff Mongrel, which is after Cliff Obrecht, one of the co-founders of Canva. He just has this Street Fighter ability to kind of
So that grit,
cut through.
doggedness.
Yeah, absolutely. So there's just all these little things, and it's so hard. It's you intuitively know it when you sort of see it, but those questions can be very clarifying.
I like to look at product velocity these days. While I'm in that month or weeks to months, sometimes even quarters of getting to know a founder, do I see some growth or improvement in them, the team, the product, the metrics, communication, the deck? I mean, all of these things can improve over time. And that's what I love about running the Launch Accelerator is I get to spend 12 weeks with them. If in that 12 weeks they take the work seriously and I see them improve, the ones that improve the most, I give a preemptive $750,000 to $1 million, a mil. I give them a mil offer to say, hey, we'll lead the round or we'll take the whole round, because I've seen over the last 12 weeks undeniable evidence of product velocity and executive improvement. Leadership improvement, because it can happen in such a short period of time.
Absolutely. How they respond in response to success or to positive feedback is a really big input.
It's just even answering questions better or having a dialogue. What are your thoughts on difficult people? We'll kind of wrap up here. A lot of people, when I meet them in their early stages of becoming an investor, this person's too difficult and they don't invest. Or I hear some of the times the older investors, this person was too easygoing, or this person was so difficult I had to invest. How do you think about the great investments and maybe sometimes being a little iconoclastic, difficult, headstrong?
I think it really depends on the business they're building.
Okay.
Some businesses, I think, really require that sort of go through brick walls kind of tenacity, almost, apathetic attitude to naysayers and so on, provided they also are balanced with that, like I said, the magnetic quality. Can they attract the right people? If they're just difficult in the sense that you don't want to work with them, but neither does anybody else, that's a non-starter. That's a non-starter. You can't really build a company of one.
They're difficult and headstrong enough to ignore the naysayers, but not so difficult and headstrong to not be able to attract talent and repel people.
Absolutely.
Which we do see at times.
Yes, you do.
You don't have to please everybody, but boy, do you need to please the people who choose to come on the journey with you.
And look, sometimes people have reasons for being difficult. Some people have had bad experiences with investors and are potentially painting you with the same brush. And, you can spend some time to get to know whether that is whether you can convince them that you're different and you can have a different relationship and reset.
Yeah, you've had that experience, I take it.
I've met a few people where I can see that that's what's happening. Yeah.
There's an anti-venture movement in the United States. It's very small, but the press seems to really harp on it. I think it's a nice headline to get clicks on, this anti-VC movement. In almost every case, there's a bunch of VCs at the core of it who are doing this sort of slow VC or zebras, or maybe don't give too many controls. So you see that here, are people generally positive on the venture community?
I think I've seen people's attitudes change. I think uncompetitive markets, invite or allow bad behavior to exist. And I think you could have said that about the last decade of some behavior of not just VCs, but sort of investors, all painted with the same brush. I think we're in a different era now. I think pretty much all the VCs in Australia, recognize that being founder friendly or being founder focused, having very standard clean terms, etc., and aligning your interests with founders is ultimately how we all win. So I'd say that that sentiment of don't trust investors is on the decline.
Yeah, it's very interesting. In Silicon Valley, we've always had these sort of clean terms, and maybe 30 years ago when I was first getting the industry in the 90s, you had this idea that the VCs, because of the 80s hangover, would replace the founder. That was just basically Cisco's founders will be replaced by professional management.
Yep.
And then that changed, I think, in the 90s, and people realized, well, no, after what happened with Steve Jobs, look, you really,
Sometimes the founder is the right person to run the company.
Exactly. And even if you don't see eye to eye with the founder, or they're iconoclastic or in his case, abrasive maybe in his earlier days to some people, it's for the better if you can make it work with the founder. And then we still see that actually in Americans or other cities where on the East Coast, I'm perplexed sometimes where people are arguing over the interest rate in a convertible note. And I had to say to one investor, that's not why we're investing. If we wanted to have a
If you're
different
a Series G investor or something and you're a
Possibly.
pre-IPO tape, maybe, yeah.
But like if you're going to get 2, 4, or 6% on a note that converts in the next 2 years on a 25K or 10K investment, you realize this is de minimis. And you actually, there's better...
Waste the time, move on.
Yeah, there's better vehicles for that. You could get municipal bonds in the United States that are tax-free at 4%. Yeah. Why are you doing this? You don't have to talk to anybody. You don't have to fill out any paperwork or have a lawyer. You could just do that with your Charles Schwab account or whatever it is.
Yep.
Why is financial services so strong here? I noticed there's like a large number of financial services startups, or is that just...
fintech startups?
Fintech, yeah.
Well, yeah, because, I think Australian banks are, the 4 major ones, and they are some of the most profitable banks in the world. I think
maybe too profitable, I understand.
Well, that's the theory, right? And that's encouraging a lot of startups to attack it at all the sides. And yeah, fintech has been actually very, very successful in the last 6-7 years in Australia in creating value.
All right. Well, listen, Sam, I really appreciate you doing this. Especially considering
My pleasure.
you're, about to have a baby in another couple of weeks. And thanks so much for being supportive of us and launch and our team here while we're in
Thanks for coming.
Sydney. Yeah, it's been great. It really is. We've been looking at other markets. The core premise that we have in our firm is never underestimate anyone.
Yeah.
And boy, have we been proven right in this market. Like it really... I think a lot of people underestimated what's going on here because of the time difference and the distance. It's just easy to be like, well,
you don't need to get in a time machine. It's just a 10-hour
no, it's just
flight.
a flight, and it goes pretty quick, and there's direct ones. And boy, Canva and Atlassian have really changed people's thinking. Mary Meeker, one of the most recognizable thinkers in tech over the last 2 or 3 decades, with their new fund, her first investment, Canva.
Yeah.
At $2.5 billion, she put in $85 million, I believe, or maybe there was some pro rata in there from other people, but that is a big vote of confidence, is it not?
Yes, we're delighted, and
she came here to pursue them, is my understanding.
Yeah, well, lots of firms did. It was very competitive.
Oh, they all flew down here to court them.
How? Yeah,
that's amazing.
Yeah.
When you think about it, because she was coming to meet with Bill Tai, she told me, to try to get something going in America. Basically told him, like, I'm going to be in America. Can I meet with you? You said
Australia.
I might be able to. No, she came to America.
Oh, right.
And told him, I'm in America next week.
So you're talking about Mel now. I thought you were talking about Mika. Yeah.
The other,
correct.
Melanie said to Bill Tai, she told this great story. He said, yeah, if you're ever in America, look me up. And she said, I'm in America next week.
Yeah.
She wasn't. She was just like, let's
Hustling.
take a shot and see. Let's hustle. And he's like, yeah, sure. I got 20 minutes for you. And she flew to America to meet with him for 20 minutes.
Well, what's really awesome is we don't really, now funds are much happier to come here and invest from, Series A onwards. And we, hope to be the trusted partner locally here for those firms.
Yeah. It's a really great bridge that's being built, and continued success to you and your team at Blackbird Ventures. And we will see you all next time on Angel, the podcast.